Well, good afternoon, Maverick traders. It's Joe with you here on the 9th of May. Let's get into a Thursday. I've got my 2 cents. We're going to share some trades. As always, take responsibility for the outcome. I got some meaningful news of the day we can take a look at and some technical analysis on the overall markets and sectors. And as always, share trades with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, folks, you can see that we actually just have a continuation of this really cool, strong trend off of a move higher for the last few days. Let's jump straight into the daily news here. The uptick in jobless claims today was actually the highest in 9 months, but it actually had absolutely no impact bearish-wise on the overall markets. This seems to be a sentimental move to the upside based off of a higher low set late last week. So I can't really chalk this up into anything news-driven. That being said, this surge that I'm seeing so far is 100% sentiment. So remember, sentiment remains bullish as this surge continues. How do we finish today? Well, flat, a little bit to the upside. A pretty good move on the S&P, more so than the Qs and some of the others, but it doesn't make a difference because we are still pushing above some serious levels. Dow just shy of 1%, and NASDAQ just over, or excuse me, the S&PY over 1%, and the Q is just over 0.25%. Russell's up 1%, and then oil and gold had their push-pull bounce. Now, gold itself of 1.28%, I'm like, oh, geez, let's take a look at that. It really was just a bounce off of a bull pullback. Advanced decline line, 71%. Advancers, 26% declining. 60-40 on the above-below 50-day moving average, which also shows, hey, this is a very strong bounce. Let's zoom straight into the charts. Here is my SPY. And what I'm looking for specifically is this move here. And it's interesting because, the volume wasn't the greatest, but it wasn't really super anemic. It has been decreasing. But I think the real caveat, or the real thing to really pay attention to, is that move right there. This higher low. When we get a little bit of a pullback and we got that bounce, and I know these did gap and move higher and higher and higher, I'm trying to find some sort of catalyst. I'm trying to find some sort of a large company that had massive earnings or big news or something economically that said, hey, everything that you're worried about is over, and I can't find it. So where I'm kind of scratching my head, folks, is the sustainability of what we're seeing over the last 5-6 sessions. How far this goes, we're actually trying to set our next level, whether it gets all the way back up to a resistance at this area. And I love the fact that Onkit pointed this out specifically because it becomes significant, or if it's going to try to roll, if it's going to hit this area and roll over. Now, folks, if it does roll over, then we have kind of a situation where we have a symmetrical triangle being built. That's right, folks. I'm throwing all sorts of darts out here. And I guess what I'm going to try to achieve when it comes to this this end of day post is, based on the move to the upside, based on where we are in the markets, I'm still sitting more towards an upside. I'm going to show you here, guys, my market outlook is going to be a little bit different than that, but overall it should be kind of a sideways trend overall. Let's move over to the Qs. You can see this one's a little bit less, a little bit more easy for me to draw some of these lines. So here's the slope. If it does indeed turn over here. Now, once again, folks, this move to the upside has not finished. So it could actually continue higher, back up to these levels here. And if it does get up to these levels, then we gotta definitely move to a more optimistic or bullish outlook. We have these two higher lows. We do have a little bit of a pullback here and a move to the upside. So are we going to push out of this symmetrical triangle pattern and actually make this more of a ascending triangle pattern? Yeah, folks, there's a lot of lines here, but it's too early to tell. You do not have to push buttons. You do not have to be in these markets. You do not have to be bullish. You do not have to be bearish. You do not have to trade sentiment. You do not have to trade your opinion. You can absolutely sit out. I'll get off my soapbox and let's jump into the heat map. Today you can see we had some push and pull going on. Pretty much some green. The majority of everything is kind of the green side because we did have an up day. Nvidia down a little bit, probably pulling back. We've got some bigger names and some things that are actually red, but overall pretty much a green day. Our outlook isn't really going to change. I have to really concur with what Ankit said yesterday, folks. I'm just taking this as what it is. We have 1, 2, 3, 4 days in a row above the 50, moving higher price action above a higher low. So here's a low, here's a low. These are progressively higher. Here's a resistance level at a crossover point, which seemed to exceed it. This is bull, bull, bull. Now the overall motion of the ocean, considering the longer term, yes, this seems to be a pretty aggressive correction that is still definitely below the overall resistance. And what I love about what Ankit said is I am not going to be comfortable until I see something comfortably above here. We could easily roll over tomorrow. We could hit the this level here and roll over. I'm going to stay 0 to -1. But how the overall movement and sentiment is, I have to agree that we are at a +1 for the monthly outlook at least and a +1 for the weekly outlook. The reason why I have a +1 on both is because I do believe we're a little bit more extended here over these last handful of days. We should consolidate or at least pull back. So I'm going to be a little bit more reserved as a +1 instead of maybe a +2. That's it. Overall, folks, I am not even going to try to fight sentiment. Now, what have I got for as far as trades? I still like my bulls. I still like my bears. There's a couple that that are actually triggering. I decided to share the 3 that I see on the bull side and the 2 that I see on the bear side that were actually triggering. So let's just jump into those. This is NTNX, and I like this because it is pretty much kind of the same idea of what the markets are doing. We have this nice area to where it's been consolidating in this range. You can see that it hit the tops, it hits the bottoms, and it's actually pushing higher. I'd like to see a little bit more follow through on the volume. It doesn't make a difference. It is confirmed. If you don't want to be too aggressive, you can do something diagonal or more of a vertical spread and just kind of play this kind of sideways to up. But I do like how it has actually stayed up here this whole time. It shows a little bit more of an outperformance and some strength in this market. So that's the one that I want to share with you guys today. Let's take a look at the bear. The bear that I wanted to share with is going to be GILD. Healthcare is pretty much weak. It's been weak for quite a bit. And what I do like about this is pretty much this last little range. I'll get more specific. When it broke this level here, and it broke it pretty aggressively, you could see not a lot of volume followed through, but boy, when it broke down, it didn't even retrace. I was expecting it to come back to somewhere at that the 71.5 level, and it just never did. In fact, it tried a little bit of a bounce here a few weeks ago and couldn't even get back to its falling 20-day moving average. So I see a nice consolidation here and what could be a rollover to the downside. Now, you don't have to play it super aggressive. This would be hard to target. Even with Fibonacci's, it'll be hard to target because you don't know if it's going to fall that far. But maybe a credit spread, something to the bear side, or even a diagonal. And if it does slip really hard, that's okay. It's okay to make adjustments accordingly. But those are the 2 that I like as far as bull and bear. So overall, folks, the bullish move continues off a higher low set last week. There's no way to get around it. It pulled back, set a higher low, and it moved higher. I expected it to roll over as much as anybody else. I'm not a super bear, but hey, as far as probabilities in a chart, that's what I expected. It didn't do it. I talk a lot about not abandoning positions because of interests or feelings. This is why. Leave them on. You need to adjust. If it's moving higher, throw on some bull trades, but don't abandon those bears, because if this market completely fails and you have that I told you so moment, it's nice to see those bears come back into play. So just kind of let it alone. If you're already over positioned, meaning you already have the trades that you want out, then just sit on your hands. It's okay. Focus on the technical outlook moving forward and add accordingly. Do not use your opinion. This is a place where it becomes very muddled and very easy to use your opinion. Jobless claims showing a larger increase than it has in a while, right? 9 months high, blah, blah, blah. It doesn't matter. They've been super strong. It didn't even affect the market. It didn't even slow it down. Be aware of earnings results and subsequent moves afterwards. It's hard to play earnings up, down, and sideways, but you know what? I always say this. I say this a lot. Take a look at the sectors that did the best. Take a look at the stocks that did the best and what sector they were in. See what they did. Did they gap down and move higher? Did they gap down and continue lower? Did they gap up and continue higher? You can get a lot of insight when it comes to sector strength and what's actually leading the way and what's favored and what's not. You don't have to trade it, but just be mindful of it. It might actually help you as you continue to scan and look for other opportunities. All right, guys, that's all I got for you today. Thank you so much for joining me, and we'll talk to you next time. Bye, folks.